All right, guys, welcome to my stock life. It's Ricky here. And a lot of things I'll cover today. Some of the things you guys may or may disagree with me, which is fine. Nobody knows what the next candle is. That's the reality of the market, right? But I'll just share my opinions and also some gamma things that you guys might ask me. I remember No Turkey last year was amazing. Sharon did a very well cooked dinner for us. And they might disagree with me, but I'm going to share my own studying, my own practical learnings. But first of all, let's just go over some monthly charts quickly on the indices, right? And I'll put this average on. This is a 8 and 21 EMA plus 50 MA and the 200 MA. So the red is 200 MA, 50 is the 50 MA. Green is the 8 EMA exponential. And the orange skinny one is the 21 EMA, okay? But we'll focus on this thick blue one, all right? So on the monthly, as you can see, 50 MA is a very accurate thing on uptrend. We're on the monthly, we usually bounce. And here, the same thing, right? We were here in 2016, 19, and during COVID, and now this time again. Could this be the bottom? It is a big chances it could be, all right? So another thing, we do have a nice little bull flag here, right? So let's see how the market reacts to this and how the monthly closes here. If we can close above this level right here, I would say July, right? The June and July levels, if we can close above the monthly above this, which would be 4,200 plus. If we can close above the 4,200 plus and hold above 4,100 at all times, there could be a monthly bottom in, all right? That's scenario number one. Number two, now let's go back in, all right? Let's go back in. Personally, I think in 2023-24, we go lower just based on certain things I'm seeing in the markets, a lot of people I talk to and the things they're going through. So just thinking from that perspective only. In 2008, right, we had this 8 and 21 EMA, and then we had this similar bounce that we have right now, all right, where the market tried to turn back up. But then again, things turned down again, all right. The 8 and 21 EMA just crossed here recently. And if we stay under these averages in the next 1-2 months, there's a good possibility of a nice little downtrend until we recover it. In 2008, it lasted for about a year or something. In the early 2000s, it lasted for a long time. Even then, we had these nice little bounces. We have the similar monthly pattern with a reversal candle, right? And then obviously the downtrend kept continuing, okay? And then obviously if you go back enough in the history, you'll see that even in the 87 crash, the same thing happened. We were sideways for many, many months. Right, we tried breaking out, but then we came back again in 90. All right, so for 4 or 5 years, the market was sideways, and the same thing here in the early 80s and back in the 60s and 70s, where the market was sideways for a long time, right? And there's nothing wrong with that. Obviously, here the market just got a little too ahead of itself when we broke out of this range on the monthly, right? It just got way too ahead of itself, I personally think. And so let's see what happens here. Again, we're day trading, so it really doesn't matter, but that's just something I wanted to show you guys. The 8 and 21 EMA, the 50 MA is holding, but I think we ultimately touch this 200 MA, which could be in the next 1, 2, 3, 4 years. I don't know when, but ultimately, I think S&P might, whatever it does here, I think we touch this 200 MA. That's my long-term goal that personally I'm waiting for. But again, we're day trading, so let's see what we get in the coming months. All right, and if we go on the weekly chart, very bullish so far. We had this nice little reversal candles where every time we get above this 8 and 21 EMA, we had a new little downtrend. This time, can something be different? Can we flag above this 4,000 level and then go up? Right. Lately, I've started looking at flows above a certain level when the flows are positive and negative. That's what I believe in, and then it gives me a great insight or an idea to what may happen. All right. So as long as we can hold above this range right here, I would say the market has good chances of upside. This range right here, I would say, this range right here, as long as we can hold above this range, I think it can become great support. But if we're unable to hold above this range, I remain that in the coming months, maybe December, Jan, Feb, March, April, we break these new lows. Then I think we break these lows and go down for some time, right? Until people feel a lot of pain. But for now, let's see what happens. Held well. Some of you guys nailed this rally. Congrats, and we'll see where we go from here. And another thing that I want to cover, if we go on NASDAQ, NDX, right, similar channel, obviously, but tech has been, I think, a lot weaker than S&P. On the weekly, we bounced off the 200 MA here, as you guys can see, right? We broke below it, then we just made this W-shaped pattern. We're still holding. So here we're approaching the 50 MA. Let's see what happens if we get there or not. All right. And on SPX, you'll see that we bounced right off the 200 MA as well. IWM on the other side, I'll go on the rut, right? It was a huge W. It actually got here long way before SPX and NQ. Bounced, came back again, a double triple bottom here basically. Let's see what happens here. Do these averages get closer and this consolidates, we break up higher, or do we break below here? Same thing, right? So we'll see where this one goes. This chart is a lot different than on the tech and SPX. One thing I want to cover today is the one play that can leave you guys with a lot of profits. I think that I covered that can leave you guys with a lot of profits. Let's go right here. So the play that we did on Friday, I'll cover the IronFly. You guys asked. It's fresh in our minds. You guys know about it, and I'll talk about it right now. So we got that play around roughly. I think this is from today on November Tuesday. Sorry. Right here, we got that play around here in the last half an hour, basically, right? So I'll go on the 5-minute chart instead, and I'll basically share why I did that play and what was my thinking behind it. Now, market had a lot of positive flows. Market had positive flows, right, all the way towards 40.50, and then 40.25 was the one that was getting the most attraction. KB, if you remember, you pointed this out, right? 40.25, you noticed that it was getting a lot of attraction, right? And so let me just make the font bigger so you guys can see, right?
Yeah.
And my play was basically IronFlies with credit. All right. Basically, I was trying to collect some credit. So basically, what I did, I had the 39.80 puts, which I bought, 4,000 puts, which I sold, 4,020 calls, which I also sold, and then 4,000 calls sold, and then 4,020 calls were bought. Now, why would I do such a play? Now, SPX was trading around 40.25, I think at that time, roughly 40.25. Now, based on this, you guys can also type if you wish. But if SPX trading at 40.25, we know that the value of these puts is very minimal. These puts are probably going for, I'm not sure how much they were going for, but maybe 50 cents. And these puts were probably maybe 10 cents. I'm just going to make up these numbers, okay? And we'll come back to the credit. How much would the 4,000 calls be? The minimum these 4,000 calls will be going for, the intrinsic value, KB, you asked. Intrinsic value is when the strike is in the money, and then the difference from the strike here. So the intrinsic value, if SPX is trading at 4,025, and we're at 4,000, the intrinsic value here is $25. Because we have such little time left into the market, maybe half an hour, so there probably wouldn't be too much premium added. Maybe it will be $26 or so. Let's just say, for example, all right, 4,020 calls, 25 calls, 4,020 calls will be trading for a minimum of $5 at least. All right, but these will have more premium added to it because they're closer to the money. All right. They won't give you calls deep in the money will have less premium. Closer to the money will have more premium. These calls could be going for maybe, let's say, I would say $8. So I basically and okay, I collected a credit of $2. I don't know how much these calls were going for, but I'm just gonna do the quick math here so we get the number. So, and I collected a credit of $2, right? So $26 I sold, minus 8, 18, and then minus 0.4, right? So these calls were probably going for 760, let's say, for example. Hold on, will I get $2 with this? 26 minus 760, 1840. No. These calls were probably going for $8.40. I'm basically trying to get your $2 credit, guys. All right. So $26 minus $8.40, 1760. Okay, so yeah. So basically, when you do this total, right? I mean, if so, I'm buying puts for 10 cents here. So which means you're giving 10 cents away to the market, right? So you're giving 10 cents away to the market. So 0.10. But you're selling these puts for 50 cents means this money is coming to you. All right. So you would 0.10 minus 0.5. And then you also sold this, means the premium is coming to you, right? So you do another minus $26. And then you're buying these calls for $8.40. All right. Which means you're getting money out of your pocket. So what would this equal? Anyone? This would equal, you guys should all have the answer for this. This equals $18, all right, negative $18. So when I make this transaction, negative $18 goes to my account, which means my account gets funded with $1,800. All right. With $1,800, my account gets funded. So what's the cost of this play? Roughly $2, right? Why $2? The reason being is the maximum this play will cost is $20 only. If as long as it closes outside of these ranges. And let me know if you guys are following up with this. Let's say if SPX closes above 4,020 on any strike, the maximum this play will cost is $20. All right, the max cost of this play is $20. All right, so let's say so SPX did happen to close at exactly at 4,027. So let's just go over the value. Why is the max cost $20? All right. Now, when SPX closed at 4,027, by the closing, these puts are worth 0. These 4,000 puts are also worth 0 in my account. These calls are worth exactly $27 if SPX closes at 4,027, and these calls are worth $7. All right. And now because I sold these calls for $26, you guys remember I sold these calls for $26. So I gotta buy them back for $27 now. I gotta buy them back for $27. So which is another $100. And because I sold these calls, I bought these calls at $8.40, they're now worth $7 only. So I lose $1.40 here. All right. Because okay, so when we go back here, so $20 was my max cost. Because I already collected $1,800 from here, right? $200 is my max loss. Makes sense? Are you guys following up here? $200 is my max loss. Okay, this is my max loss. So basically, because SPX closed outside of my range, I had to buy this play back for $20, which is $2,000. Well, I already collected $1,800, so I lost $200 per play. Now, the reason I took this play because there are some strong pulls here. 4,000 also had interest. If this was to break below 4,018, 4,017, or even this support resistance right here, 4,015, and even if it came down to 4,010, for example, if it came back to this zone right here, 4,010, let's say SPX closed at 4,010, how would this play benefit me if SPX closed here at 4,010? Let's go over this. So SPX closes at 4,010. Let's say, for example, if it closes at 4,010, how much would this puts be worth? 0. How much would these puts sold be worth? 0, obviously, out of the money. How much would these calls be worth now? If SPX closes at 4,010, how much are these $4,000 calls worth? You guys can type in the chat if you want, right? These calls will be worth $10, all right? And these calls, 4,020 calls, how much would they be worth? They would be worth 0, obviously. Why? Because only one call is in the money. We're in the range between 39.80 and 4,020. Everything else is 0 except the 4,000 calls which are in the money, and they're worth $10. So let's do the math here now. So 0 plus 0, I don't owe nothing there. I don't buy anything here. But these calls I sold at $26, right? So I sold these calls at $26, but now they're worth $10 only. They're only worth $10, right? So here we go, $10. I basically just give them back, and I bought these calls at $8.40. They're worth how much? 0. So 0, 10 plus 0, for example. And the total cost of this play is now $1,000, right? The 4,000 calls which I sold, I basically gotta buy these calls back now at the end of the day. So when I buy these calls back, they're only worth $1,000. Okay, I collected $1,800, so I collected $1,800 from the market. I give back the $1,000, right? I purchased these calls back for $10, $1,000. What's my profit here? I keep the $800 in my profit, right? I keep the $800 into my pocket. So $200 to keep $800, right? Which is how much percentage? 400% on my play. 400% gains, because $200 was my max loss. But here I got to keep $800 or $1,000 in total. You can say, it doesn't matter how you do the math, right? So for risking $200, I'm keeping $800 here because SPX are closing the range here. What's my profit, right? 400%. If SPX pinned 4,000, let's say for example, if it pinned 4,001, just an example, right? It came to the whole number, it pinned 4,001. This would be worth 0. This would be worth 0. The calls would be worth only $1, and these calls would be worth 0. How much is my play worth total? These 4,000 calls which I sold, I gotta buy them back, right? But because they're only worth $1, I buy them back for $1, right? Which is equals to $100. And how much money did I collect from the market? 1,800 minus this $100, $1,700 profits on risking how much? $200. This is why I chose to do this play, because there was a good chance if the market even gave some even little weakness, I would have made great profits on this place. And how many times in the market have we seen SPX drop like 10, 15 points in the last half an hour? It's very possible, right? And this obviously goes towards position sizing, later on of how you make money. So if I lost this one play, which is fine, next one, I'm sure I'll hit it because my probability with IronFly is very high. Even if I miss that, I'm sure I'll hit the third one. Like, I don't give up on these because I follow the gamma levels where the most attraction is, and you basically make your money off it. Now, this was the call side. Let's see if SPX broke 4,000. What if SPX closed, let's say at give me a number between 4,000 and 39,980. Any one number, whole number. Someone? Anyone? No one? Okay. No, under 4,000. Okay. Between 39.80 or 4,000.
39.90. Let's go with that. 39.90 if it's a 10 points down.
39.90. Okay, so it's the same thing. Okay, so 39.90. So we're doing if SPX closed at 39.90. Okay, if SPX closed at 39.90, how much would the 39.80 puts be worth? $0 out of the money. How much would the 4,000 puts be worth? If SPX closed at 39.90, how much would the 4,000 puts be worth? $10, right? So these are worth $10, right? And how much would the 4,000 calls be worth? 0, obviously. And then 4,020 calls be worth 0. So what's the cost of this play now? So I bought these puts for 0, right? I sell them for 0. I sold these puts for 50 cents. Damn, I gotta buy them back for $10 now. $9.50 more than what I sold them for, right? So I buy them back for $10, right? And then 4,000 calls sold. I sold them for $26. I get to keep all of the credit. These are gone to 0, right? These are gone to 0. 4,020 calls, they're also gone to 0. What's the cost of this play? $1,000, right? How much did I collect from the market? $1,800. I buy this back. I buy this IronFly back for $1,000. So I minus $1,000. How much am I left with? $800. Right? That's my profits. That's my profits. $800 on $200. Right? So 200 to 1,000 basically. 400% profits. Pretty cool, huh? This is why I sometimes do these strategies, and you're gonna see a lot more of these from me now. Right? I took some weeks off just to relax, chill, clear my mind, and so I'm going to be doing a lot of the IronFly plays. And when I sell these, you do the opposite, right? I mean, when you execute these on your platform, right? Sometimes you just click on it to sell, and then these all get reversed, and vice versa. Whatever you buy will be sold, these will be bought, and so on. Okay. Now, another thing, what if SPX closed at 39.78, for example? 39.70. What if it closed at 39.70? Like, there's a huge dump that comes into the play. What happens then? These puts will now be worth $2, right? 39.80 put is at 78, so it's worth $2. These will be worth $22. Damn. These calls will all be 0, obviously, right? Calls will all be 0, right? And so let's just go over this. The 39.80 puts, I bought them for 10 cents, so I'll make $1.90 profit on those because they're worth $2, right? So they're worth $2, right? And 4,000 puts, I sold them for 50 cents. I gotta buy them back with $22. That's $21.50 loss on this strike alone, right? So I gotta buy these back for $22, right? So $2,200, and then I gotta 4,000 call. These are all 0, right? This is all 0, right? All 0. And what the total play? We know that the max will be 2,000 regardless, right? $2,000 in total. Okay, and so basically, we collected $1,800. We're buying it back for 2,000. We lose $200, right? If we close outside of these ranges, anything above 4,020 or under 39.80, we basically buy it back for the entire money, right? And our max loss here is the difference between the strikes, 20. So 20 minus 18, $200. We take a loss. If it closes between anywhere in these strikes, the easiest way to calculate these butterfly, you don't have to make it so complicated. All you gotta do is, let's say if it closes at 39.95, if it closes at 39.95, right? The intrinsic value here from the mid strike, you always take the mid strike, okay? Not the far, the mid strike. You take the mid strike, 39.95, the intrinsic value is $5, right? So you give $1,800 minus $500, and you get to keep the entire $1,300. All right. So you keep the entire $1,300. Fair enough. If it closes at 39.83, for example, right? 17 bucks. So 18 minus $1,700, right? You get to keep you make $100 profits on 200 bucks, which is 50%, which is still not bad. And let's say, and you don't have to hold this until the close, until the market closes. Let's say, for example, all of a sudden SPX gives a 10-point drop. SPX is trading at 4,007, for example. These butterflies won't be worth $7 at that time, but these butterflies will still be worth maybe $9 or so, because some of these calls or puts will have some premium, right? So so you can sell here if you want when they're worth $9. It means you get to keep $1,800 minus 900. You still get to keep $900, right? You don't have to hold it until the close. And if it continues going towards 4,003, so on, the closer it gets to the mid strike, the more profits you make, right? Because that's where the most premium drop happens. Clear? Clear?
Sounds good, Ricky. Yep.
Okay. And so that's that. And one thing, KB, you posted a chart that where the gamma is reducing and increasing and so on, right? That has to do a lot with the dealers hedging, where the market makers basically have to make their moves, right? For that, I would have to do a live session during the market hours sometimes to explain, and we'll look at the gamma live and then we can explain. But before you guys get into that, you guys must learn what Greeks are, what deltas are, right? How theta works, right? How vega works, delta, theta, vega, and oh, I'm forgetting
Gamma.
gamma, right? So these, the most important one. So how these Greeks work, and then obviously we have row A, the list goes on, the list goes on. These are never ending Greeks. Greeks are never ending. The list just keeps on going on, okay? Because numbers is never ending, right? And but these are the four most important ones. All right, you can also learn this. These are a little advanced, but these four are the main ones. All right, how these works, okay? And so you must understand these in details, right? I mean, if that, for example, if now this I'm not going to explain to you guys, but I'm just going to put it out there for you guys. If stock ABC is trading at $100 and you're buying 105 calls, for example, and the delta on these is 0.25, for example, and the gamma is so and so. If your calls go up, let's say ABC stock goes to 101.50, how much will these deltas be, right? Now the platform will tell you, obviously, let's say these deltas go to from 0.25, they move to 0.38. This delta went up by 13 cents. All right, the delta went up by 13 cents. This 13 cents, what happens in the market when this delta goes by 13 cents? I'm going to leave these questions for you guys. I'm not going to answer these for you guys, right? What does the dealer have to do on this when the delta increases by 30 cents here? What took place between this difference when it went? Let's say, for example, Apple comes back to, now you guys can write these questions down so you guys can understand. The reason that I don't want to explain this to you guys, because if you put your own work into this, you will learn a lot better because you will actually work hard on it. If I explain it here, it'll be just something given out to you guys, okay? And then let's say, for example, ABC stock trades at $98.20 or so on. Your calls here, right? Your calls will always go down, but your delta from 0.25 will also fall because it's going further out of the money. The delta maybe goes to 0.16, I don't know, whatever it may be, right? How does this impact? This 9 cents change, right? The 0.09, the delta change, what exactly happened here in between? What happened in the markets? If you guys want to understand how the market works with the options, gamma and everything, you guys have to learn a lot on these things, right? And another thing that you guys don't have to know this, obviously, unless you get into a very if you guys want to get really technical and advanced, but don't go here right away, right? The Black-Scholes model, right? This is something or formula, right? Whatever you want to call it, something that you can get into later on once you fully understand a lot of these things that are going on, right? And don't start studying this right now, as you will waste your time. It'll be useless to you. Get to this once you fully understand the Greeks, how the gammas work and everything. All right. More education is better. You don't have to know these things, but it'll just help you understand a lot of things. All right. And again, certain times I give you guys a lot of resistance levels and supportive levels. These support levels, they change every day on all stocks and indices. Let's say, for example, today ABC stock is trading at, like, because I give you guys gamma updates, right? So I'm just going to explain you guys some things. If ABC is trading at 100, my Monday gamma updates might tell you there's resistance at 103. There's resistance at 103, and under 99, we might get bearish. This is based on the options that I was just explaining at the levels, is based on those options, because that's something I learned and come across where the selling and buying may occur. All right, they're not right all the time, but the accuracy on those is top model. That's the best thing I've come across in my life in the markets. Currently, I'm not trading individual stocks. If I was, I think I'd be doing a pretty killing in the market. And the reason I'm not in no rush, right? My accounts are very reasonable. I don't have massive accounts because I do withdraw money out of my accounts. I have expenses. So I have to be very careful with the money I trade with, because I cannot take it for granted. I need that money, right? Every penny I have, I need, right? So for me, because I do have some responsibilities I have to take care of. And that's the reason I'm very patient with my plays, and I go in with less money, right? And I'm basically living off of trading, which requires a lot of patience and everything, no, KB, you're jumping it. Just get here first. Anyways, back to this. So if ABC is trading at $100, and I tell you guys, 103 is super resistance, and if you buy this, and above, and I might say something like above 101, and I might say something like above 101, there could be buying that might happen. The reason I can see that is because once it's through this gamma, there's a certain the dealers might have to buy this name until it gets to 103. So what you could do is play this name, look at some options. There will always be call volume showing up. Call volume will be visible, guaranteed, if they're going to take it up, because that's just how options chains work. So when I say above 101, the buying can go on to 103. And I think those that have been following my gamma levels, you guys have seen how the accuracy level on those, right? By the time it gets to 103, sometimes what happens is they might take this above 103 to maybe 103.90. Sometimes they might just stop at 102.76, for example. Right, you guys see sometimes they'll stop it just before 103, and sometimes they'll pop it through 103 but bring it right back to 103 again. But so what you want to do here is, by the time you get to resistance 20 to 30 cents before, take your profits on that stock, whatever you're playing. All right, now under 99, if you were long, stop out. Maybe under 99, if it's bearish, you want to look at some put volume coming in. Put volume, or if you can see some buys, right? Because that will give you a confirmation. Because 99, what they might do here, they might bring it to 98.70 and reverse right back up. I like calling these delta adjustments that take place. All right, delta adjustments. This is just my own term that I made. This is not, maybe it's a term out there as well, but I call them delta adjustments. That's what I just call them, and you guys hear them on me saying this all the time. Right, and you can usually tell this with a huge volume bar. And same thing here at 103, you guys might notice delta adjustment. If you guys notice this, take that position, because market makers here have adjusted, and now they're probably going to bring it back maybe to 100, 101. But if they hold it above and they keep going up, you guys will hear from me that 103, hey, you know what, the next gamma level is maybe 106. It means the way is clear from 103 to 106. Okay, and so you guys have any questions on resistance and support levels on gamma, which I give? And on Tuesday, maybe these levels will change, because options, open interest, and everything, they change every day, right? And gamma changes every second, by the way, just so you guys know, right? And we get the updates later, but I try my best to give you guys the best answer I can. Any other questions?
Yeah, Ricky, I have a question about gamma changes with the flow or the price action.
Well, with the floor, options, right? It changes, like all the buying, selling that's going on, options being added, being sold every second, right? So it changes every second. But the majority, it does not change by big, but the big changes take in the same day expiry in the last half an hour. But overall, like gamma often changes. Sometimes there will be positive gamma to the upside, and by the end of the day, it'll be negative. So reading gamma is not easy. It's very tough. is not always right. Like gamma is always right, but we don't know. Like, let's say, for example, if this stock 105 had a lot of positive gamma, for example, this means it's going to go up. But what if in the next second somebody slams 98 puts and somebody comes and sells these 105 calls? Now the gamma here will be reduced and here it'll be increased. This information we don't have. This is why I watch flows to make sure that, or maybe just get the best sense that which way we're going to go. Make sense?
Makes sense, yes.
Bet on gamma all the time. Well, this is where the gamma is, I'm going to play this, right? Because you will get screwed up on that. If trading was this easy, I'd be a billionaire right now. And the reason, I've been following these things for the last over 1 year now, and I've just gotten so deep into them that I kind of understand how this stuff works now. So I'm being very patient with it, right? For another few months, I'm just testing some things. And then let's see where we go from there. And whatever I do a live with you guys, I show it to you guys. And but yeah. But on individual stocks, are a lot better than indices right now. All right. So why? Because we only have one expiry every week on Friday. Okay. Indices is everyday expiry is very tough. So I might also shift towards trading individual stocks only now. I might make that shift from SPX to this because our odds against the indices, the odds of being right have decreased, right? Have decreased, and odds of being wrong have increased in indices. Okay, that's something. So why am I going to do this? And plus, the moves are no longer there in the indices as much as they used to. So we simply have to wait for some of those deals when the moves happen. So right now, individual stocks is something I would focus on. If you guys, and that's something I might even also make a shift towards because these are much easier to read and play based on them. All right. And so yeah, and sometimes when I say if the flows come off, when there's a lot of positive gamma, see here when the market was trading here, let me show you guys something. Why am I saying that the flows might come off on these names? The reason being is because what's happening here now with the calls, basically what's happening here with the calls is what was happening here with the puts. It was what was happening here with the puts. All right. That's the reason I'm not chasing this rally, because what was happening here with puts is the same thing that's happening with calls here, right? It's the same thing that's happening with calls here, okay? And I mean, if they shift the call demand higher, then it's a whole different case. This I'm not seeing yet. There is no demand higher. In puts also, there was no demand lower here. So the behavior here on the call side is the exact same, almost same as here when it was in the puts, right? I've been following gamma for a long time now. It was the same here, right? It's the same behavior here, and the call side is the same, and is the same when it was here, right? So do we go above this? Yes, if I can see the demand above it. If I can see the demand above this zone, I will shift towards upside for that thing, but I need to see it. Until I don't see it, it's tough, because right now downside there's not much. There's some positive flows around these levels alone. If these flows come off or they sell it, and then the downside will be added, there will be big fast red candles. The next downside move I expect, if it happens, I'm not saying it's going to happen, if it happens, is something like this. It's a straight fall down when it happens, right? It's just going to be a straight fall down, all right? Because everyone will chase it to a downside, and downside is usually a lot faster. But if we continue consolidating here and I see that 4,400 is built up, then forget the downside. I might just sell premium, that I might ride this to the upside as well. All right, but I need to see the demand up here. If I don't see the demand and this keeps going higher, I will simply sit on the side. I'll miss this move if I have to. It's simple. I'm not going to force it, right? So I need to see. So that's why I say some of you guys are calling biased and whatnot. That's why I say that I want to trade the facts, and these are my facts when I say that if I see the demand higher, I will trade it. But I'm not going to guess it here that this looks like a bull flag. This is what's happening. I mean, that's not my trading style. I mean, of course, the chart looks bullish that we can go up from here. Absolutely. I simply don't know what's going to happen here because I cannot see. I cannot see up. I cannot see down. I need to see one side and then I'll jump onto that side. It's simple. And I'm not able to see it right now. As simple as that, right? But again, like I said, so I might also shift my focus to individual stocks because they are a lot better right now than indices. Any questions, any comments? Anything else? I think Mr. Black had a question, which I forgot. Banks, XLF, I mean, same thing, KB. I don't have anything to go over. They're holding very well. They're holding very well. We're holding above this range. We are near resistance, right? We're near resistance here. We're near resistance, and let's see where we go. But what I can go over is the monthly chart on. So I'll take off my pages and let's just go over the monthly chart here. On the monthly, what I want to show you guys, right? When we are in a certain situation like we are right now, banks fall on their face. Look at this. XLF went from 22 bucks to where? $3. It lost most of this index, lost most of its value, a lot more than SPX and NASDAQ back in 2007, 2008, right? So when people are in trouble, like that just keeps going higher. And this has to do a lot more. I could be completely wrong. Maybe there's something I don't understand in the monetary policy, obviously, right? Playing banks is very hard. You have to understand a lot more than just playing the other indices, right? Then this can continue going up while the market, even if the economy stays weak, bank, I don't know, right? But just I do want to know one thing, that when things turn bad in financials, they go down a lot when they go down, and certain other things. But for now, they're holding, so I don't really have, like, it makes no sense for me to try to show my downside because they're holding. So they're pretty strong right now, and let's see what happens, right? Let's see what happens. And so yeah. But when the downside comes, if it's going to come, it's going to be very fast. That I know. But for now, they're holding very well. So let's see. Right, I'll just run the US 10-year rates. The rates came down here, bear flagged here a bit. Let's see if we hold support here and we can go back up. Let's see, or do we continue coming lower, right? And but basically, I see it as a nice little rip, dip, rip, dip. So let's see where we go here from here. The dollar measurement index, ooh, it's right at the 200 MA on the daily. Let's see where we go from here. A nice little from 114 to 105. The last time we were at 105 was in August, right? Let's see where SPX was at that time. So in August 10th, this is where the dollar measurement was. So well, we can't really always compare like this, but just something. And we were at 4,300 plus, guys, right here. We were right here at 40. So SPX is still a lot lower compared to dollar measurement. That's weakness. You guys see that, right? SPX was here when the dollar was around the same level, and we're a lot lower now. We are a lot lower, 200 points. Does that mean that we go up 200 points? Or was the fair value here was just higher than it should have been, right? So that's another thing to keep an eye on. And let's go on VIX. The last time VIX was here and we got the gap was 19th and 18th August, right? So 19th and 18th August. Let's see where were we here. So on 19th and 18th August, we were right here at the top, 4,300. And now we're at 4026, right? So that's weakness. That's a win. That's a lot of weakness. You guys see that? That's weakness. That's basically setting up for the next leg higher. They did this the entire year, basically, right? SPX, if the strength would have been SPX trading above this with VIX at 20 plus, or should have been above this level. Trading it well below with VIX where it was here, right? That's weakness, right? We're 300 points away. So that's another bearish signal, right? And but yeah, but that was it, guys. And so let's say tomorrow's Friday, the market's only open for a few hours. We'll see what happens. And thank you. So who's asking? Is my DIAT asking? Oh, that's Dream Team T. DIA. Dow Jones. Oh wow, this actually looks a lot better than Tech and NASDAQ. This looks a lot. See, Dow looks a lot better. Yep, this looks a lot better too. This looks a lot better because now the comparison that we just did, Dow is way above the SPX, right? It's way above SPX. So Dow is definitely doing a lot better. Let's look at NDX quickly as well. NDX is doing, oh wow, NDX is really weak. This is really weak. Another scenario to this would be these stocks catching up with a big squeeze. If Dow and thing holds up, NASDAQ can have a big squeeze. If we look at stocks like Amazon, I mean, these names can have a big squeeze in case if they want to catch up. These are the names that can move big than tech. If you want to look for upside, I would focus on Amazon, Google. Google looks a lot better. Or Tesla. Tesla definitely nice little bottoming candle here. I really wanted to actually play that. I think Nick got into this play, but I just didn't because of SPX. So this is a very good play, a very strong support level. For temporary for now. And Apple's doing pretty well. Apple's in the Dow too, I think. And but yeah, DIL definitely looks a lot better. And now if NQ, so you guys see this big squeeze here that took place, all right? This big squeeze that took place here, as long as the market holds and happens, this kind of move can happen in NDX. So that kind of a move can happen if the market holds up. So we could get a nice little big squeeze here. There's no doubt, right? If the market holds if we were to look at the upside scenario, and SPX could definitely get a nice little squeeze here as well, just to catch up. That's another scenario. Another scenario, Dow, if this is a top action, it gives up, then SPX and NDX will make new lows, right? So scenarios are both ways. And one thing that's helped me a lot this year is I can't type in here again. Never mind. Is just staying open-minded. I think this has helped me. Like I don't care which side we happen, because stay open-minded to both sides. I'll trade whatever is in front, and right. So I'll trade whatever is in front of me. My long-term bias. Yes, I think the market makes lows, but that doesn't matter. I don't really have millions of dollars to take advantage of it, even if that happens. So I will trade what's in front of me. If I have to trade NDX at all-time highs, I will. All right. If I have to trade at all-time lows, I will. And that's something that's helping me a lot in these markets. Again, the only thing I'm personally waiting for is this. I'm basically waiting to see demand above. If I see the demand, I'm one of the first one jumping in calls. If I see demand lower, I will be the first one jumping in puts. It's simple. Right now, I'm just not seeing this. I'm just not seeing this. So I don't know where we go from here. So we'll look at some individual stocks, like I said. Oh, what do I think? Up or down tomorrow? That, yes, T, I do agree. Tech, I mean, if the dollar measurement stays lower, obviously, then tech and well, tech will perform better if the rates come down faster, I would say, right? And then tech has chances. And again, if the dollar comes down, of course, tech is going to help tech and SPX both. And tomorrow, whatever comes back, I don't know. I mean, so far here, I mean, what if the dollar bounces here? What if the dollar bounces here off these 200 moving day averages, right? What if the dollar bounces here, right? What if the dollar bounces off these 200 day moving averages? We might break 200 moving day average here. And on here, we might break 200 moving average to the upside, right? We might break it to the upside. And then what if we come back again? And then, so a lot of scenarios possible. And then the dollar goes back up, right? So a lot of scenarios here. Anything is possible. For me, I will simply just wait what happens. So tomorrow, that's what I think of either side. But in the long run, if you were to ask me, like, what happens in the coming weeks on the dollar, I think we break these highs in the coming months into 2023-24. I think we go a lot higher. And on SPX, now this is my personal bias. This I'm biased long term, but day trades, I don't know what's going to happen. Into 2024, I think we go a lot lower. But that's just my bias. That's my bias. If you guys want to hear it, right? So let's see. Now, the most beautiful thing here that I want to conclude this with, the only way I will end this is, even though I have that short-term bias, if I have to trade SPX above all-time highs, I will be trading it with you guys. It's simple. Then my bias can go to shit. I don't care. It's simple, So that's where it is. No one knows the next candle. That's the best thing, right? Nobody knows what's going to happen tomorrow. Not a single one person. I don't either. So we'll go from there. Thank you, guys. So a few of you guys showed up. Rest will be a lot. I did get some DMs, people that wanted me to record it. It's Thanksgiving, we understand. So we'll put the recorded version up tomorrow or on the weekend. Thank you so much for attending, guys.
Thank you, Ricky. Sounds good.
Perfect. Thank you, Ricky. Thank you.
Anything you guys want to share? Anything you guys want to share before I end? Anything? No? Okay.
Nope, you covered almost everything.
Okay, sounds good.
Perfect.
More of these sessions. I know we missed it for the last few weeks, but I think we'll start doing them more often.
Sounds good.
I think I'll do more sessions. Because pre-market every day, you guys already know what we cover. But sessions, maybe we'll start doing one every bi-weekly.
Yep, that would be great.
Yeah, thank you, Harman, Dave, Nick, Gagan, Eli, Dream Team T, Chris, and yeah, and I'll see you guys in the chat tomorrow.